Good morning. This is BloombergQuint, and this is the stocks to watch. Today, we are talking about HDFC Limited, Piramal Enterprises, and Cipla. And to take us through some of these stocks which are in the news, we have Avinash Gorakshakar, Director Research at Profit Mass Securities. Avinash, good morning, and thanks for joining in. Now, before I get in, Avinash, let me talk about the first stock that we want to address, and that's HDFC Limited. From what we understand, it is raised about 14,000 crores through issuance of equity shares or debentures, and it's to raise through qualified institutional placement. Of course, we still have a few more developments before this happens, but the funds raised will be used for long-term purposes for organic and inorganic business opportunities. Avinash, let me get you a conversation. How do you see HDFC Limited as a housing finance company, a finance company in general, as compared to the rest of the sector, with relation to the price at which it is currently trading at?
Yeah, good morning, Agam. I think Agam, clearly funding by HDFC Limited is definitely a positive development, considering the fact that they have one of the best asset quality kind of benchmarks in the entire industry. And despite the coronavirus outbreak, I think it is one of those housing finance companies which still has a very decent track record in terms of servicing their payments and getting a regular kind of inflow from their borrowers. I would believe that current price definitely is definitely discounting a large part of the coronavirus outbreak in the numbers, and in fact the management also pointed out post the Q4 numbers that overall I think markets will be challenging at least for the next 1 or 2 quarters. I think more than the growth, I think the institution is obviously looking at protecting its balance sheet and preparing for the next haul, possibly in the second half of FY21. So net I think longer term definitely money can be made, but yes, in the near term housing finance sector as a whole is going to go through challenges, and you might see a lot of consolidation happening here, and obviously HDFC being a large player is going to benefit out of that. So I think net on lower levels or maybe on declines, one could definitely look at accumulating HDFC as a long term kind of portfolio stock.
Okay. Piramal Enterprises then, and from what we understand is that it's acquired a drug dosage facility from G&W Laboratories that's in Sellersville, Pennsylvania. It's not a very large amount. It's paid about 123 crores. That comes to around $17.5 million. And this gives the company an ability to handle potent formulations in North America. But the other aspect is that while Piramal Enterprises may have made this acquisition, it is also making a lot of moves otherwise in the NBFC space. Avinash, my question to you is that, one, how do you treat this company, and what are the prospects as far as, well, the various businesses that it is involved in are concerned?
No, I think Agam, this news flow is definitely positive, but it forms a fairly small portion of the overall revenue pie. And I think, as you mentioned rightly, Piramal Enterprises is largely in the focus because of its NBFC and property development kind of business. I think to a large extent, the markets as well as most of the analysts are concerned about the moratorium, which is almost 80 to 85%. And I think in all probability over the next say 2 to 3 quarters, I think the real estate piece is going to be more important than the pharma piece. I think the management has also hinted with a cautious stance that they are looking at the market very cautiously. Incremental growth may not happen, but the markets would be happy that the moratorium reduces and the money is serviced by the borrower. So I would believe that at best this could be a short term kind of upside for the stock, considering that pharmaceuticals are in the limelight. But nevertheless, for Piramal Enterprises on upper levels, maybe you could find some stiff resistance. So I would prefer to have a hold here rather than go out and buy now, because ultimately what this acquisition actually brings to the top line, to the profitability, to the earnings is, I think, at least 3 to 6 months away. So net a small positive, but the bigger issue remains the real estate piece, which is yet going through a big challenge.
Right. Okay. Move on to the final stock that we want to address, and that's Cipla. Now, Cipla had formed an agreement with Gilead when it comes to specific drug called remdesivir, and from the latest we understand that it has launched a generic version of remdesivir called Cipremi, and we already know of the fact that remdesivir is one of those drugs which is used to treat patients with COVID-19, severe COVID-19 disease. Of course, this is positive considering now Cipla can manufacture and market this drug. But Avinash, even if you leave this news on the side, How do you rate Cipla in comparison to the rest of the pharma sector?
I think, Agam, if you look at the performance of Cipla vis-a-vis the other pharmaceutical majors, I think some amount of underperformance has been seen in the overall top line as well as margin kind of performance. I think US markets continue to remain a challenge, and this new drug which Cipla has launched, with an Indian company called Hetero, I would believe that it's going to be a long, at least a 3 to 6 month time frame before we could see actually the kind of business generated by this drug. Definitely, it's a big positive, but I would be surprised that this company may not be completely and immediately be re-rated. I think you'll probably have to wait for a couple of quarters to see the effect of this drug on their top line. But overall, I think it would be a steady performer. I think not a very high volatile stock. At the same time, investors who want to take a longer term view can obviously accumulate it even at the current odd level. So net, long term positive, but yes, in the near term, nothing so great which the stock can be re-rated significantly.
Avinash, I'm letting this segment by asking about any interesting idea that you're picking up at this point in time.
In fact, Agam, we are very positive on the rural space, and we find companies within this space likely to be the first beneficiaries once normalcy starts. So, a company called Finolex Industries, we are very positive. We believe that looking at the agri space and the kind of government initiatives and the demand which is expected, Finolex Industries should benefit significantly. PVC prices are softer; they are one of the integrated players. So, probably even at these levels, investors should look at it. It's a very well managed company with virtually no debt on the balance sheet, extremely good working capital. And I think probably, over the next 12-15 months, it could be a decent kind of stock where a decent risk reward, could be achieved. So I think one should definitely look at it positively, because this is a stock where one could expect a decent upside about 15-20% over the next 12-15 months.
Okay, Avinash, really thank you so much for joining us and taking us through those counters that we will focus.
Yeah, thank you.